Welcome to another edition of Cattle Call and Happy New Year. We're recording this here on New Year's Eve and excited to see what the next year is going to bring for this cattle market. By the way, Cattle Call is being brought to you by Wolf Auto, small town strong. As you can see, Scott Varilek's joining us today with KKV Trading out of Sioux Center, Iowa. Brad's got the week off, so we get to get a different thought and opinion as to what's happening within this cattle complex. And Scott, I'm excited to kind of get your takeaway as we look at this last couple of weeks of 2024 and we head into the new year. And you made an interesting statement before we started about January is kind of not the favorite month to do any cattle selling. So I kind of wanted to start there. What is your takeaway as to why January is so tough on us?
Yeah, and thanks for having me. Merry Christmas, Happy New Year, and God is good. And it's been a great year for the cattle market as well. But yeah, starting with the January thoughts, that's always my least favorite month to sell cattle. It feels like we usually advertise some packer kill cuts. They do some of their cooler cleanouts or some maintenance. So we usually see those kind of seasonally kind of happen. So when that starts to be talked about by packers, it's not a surprise. I think that's, they like to really overplay that and stand up on a mountain and preach it. But I would expect some of that to come, some of that based on our tighter supply. And it's a way to back up cattle for them. And, we just get past our big rib demand season and some of that excellent shelf business that we get there. So would expect that we kind of lull just a little bit because we always feel like, hey, spring's coming. Let's get that spring demand kind of kicking in. And it's just too early yet. So would expect to see that little bit of a, pullback in January. We usually have some, rough basis kind of issues too. But luckily, Feb futures are well underneath where the cash is at now.
Well, talk of cash, this last couple of weeks has been an amazing ride for our cattle producer. And last week was no different when you saw high cash move in post-Christmas.
Yeah, high cash prices have been what's leading us here. It led us out of the gutter this last break that we had. And, even on Saturday, they were out looking for cattle. There was some 197 trading, some 197.50 to some regionals. And some guys were even able to pass that bid because we're current enough. And it just feels different. If you look back for years, producers have not had this kind of leverage in a long time. And we haven't. We've got all packers bidding. We're able to pass. We're able to take bids and choose where we're going. We've got people getting live bids that never get live bids in some of those remote areas. So it feels like we have the upper hand on the live cattle cash side. I fully think that we still have that leverage going into the next year. And then the cash feeders is the next thing. Both those cash markets are really on fire.
So do you see that fire continuing into the new year? At least on the nearby?
Yeah, I see a lot of confidence, especially in this cash feeder market. I mean, these prices really, there was about a 5 or 6 week stretch that they just went straight up. I feel like we saw, maybe some heifers getting held back earlier in this fall. And then as we've just climbed real fast, it's getting tougher to think, are we going to be able to rebuild this cow herd or not? Just with the sheer cost that it is. I mean, it's a 2,000 pound or $2,000 heifer calf. And it's going to cost, my cowboy math says about $1,000 per year on that animal. So you're going to be 2 years into it before you have a calf ready to market. And you're going to have $4,000 in this animal plus interest on it. So $4,500, $4,600. That's a big pill to swallow. So I don't think we're set up to just rebuild real fast right here.
So how do you pencil that out? I mean, if there's somebody that says, I do need to retain a few of these heifers to keep my herd going, but man, I could ship them off to the sale barn and put some nice coin in my pocket.
Yeah, that's the other side. You feel like this is my year to capitalize and to cash in. And for a lot of our, older generation ranchers, it's absolutely that. We have such a labor shortage and challenges of our own and higher input costs. So it makes it a little bit easier just to load a few extra on the truck rather than say, I'm going to keep a few extras back. It's a lot easier to send them on along the way. So, and I think that's why we're at all-time highs, is because that's happened over the years. We haven't had enough of the dollars trickling all the way down to the cow-calf guys. So the market had to say, hey, this is why, we're at high prices because we're unable to do it for this price. And the market's kind of fixing itself. So it's just very frustrating that we have that's the beef market that we have, that we have to raise less numbers to get the market to rally. That's really all that we have. And I know Brad's probably talked a lot about that, the leverage that the packer has with all the formula cattle. And I think this is your after effects of what's happening from all of that.
But wasn't there a glimmer of hope? I mean, I remember Brad and I talking in October that there was a little bit of a herd rebuild. So we thought maybe we were starting on the uptick.
I really thought that we were too. I mean, there was a little bit of a time frame where it was going to happen, and I think, yeah, that big 5 to 6 week rally really pulled it off. So, and then we have to note as well, it's starting to dry out in some cow calf country. I guess in the north, we'll decide on the south how much rain that looks like. You know, they had some little bit of a boost of moisture there this fall, but if we'd start to dry out, that could be the next thing that's going to curb it and pull it back in again.
So then I want to ask you about the dairy side of it. We know that dairy beef has kind of been the new chic word to use, but it might have got the dairy industry in a little bit of a hiccup as well.
That's been a nice token for the dairy industry that they were able to breed beef and become efficient that way, have a more efficient calf that's on the ground, something that's worth a little bit more, and to the tune of 6 million head if we're breeding about 90% of the herd to some of those beef animals. But what's happening now is I think they maximize that to the point to where here in the recent, what I'm hearing is that there has to be some of those cows are going to have to be bred back to dairy because there's that shortage of dairy heifers. They're like, where are they? So I think in the short term here, there's a little bit of going back to dairy. So that could be adding to this fire that there's a few less beef calves hitting the ground. It can shift back pretty easy. The dairy industry knows how to shift and they know how to become efficient. So I feel like we'll be watching those shifts, but as of now, that's going to add to the fire here of tighter numbers.
What about the deferreds? What are your thoughts on those contract highs?
Yeah, I love seeing some contract highs happening in the deferreds, and it's given guys, prices to look at that they're interested in. But the way I always look at it, when the deferred contracts are making contract highs, I usually kind of think the fronts can too. We've already kind of got that in our head that it can happen, or vice versa. If the fronts want to lead the charge and make some contract highs, I think the deferreds can as well. So it's a great way to finish the year. Let's get this thing just calendar turned and see if we can't do it on the fronts now.
Well, as we get ready to wrap up this week's episode, what are your thoughts on demand as we move forward from a consumer's perspective and the supply that's there?
From the consumer side, the demand has been so rock solid. It's something that we've just been able to rely on all the way back to when we went through COVID. It still stayed on. We've got a consumer that wants a high quality product, and that's what they're telling us. We've got this shorter supply, so we're importing, about 2 to 1, importing over exporting, but usually importing those kind of grinding meats. But as long as the economy holds together, I don't see any worries or any hiccups there. It felt like when we were looking at some financial crisis, maybe consumers are tapped, maybe this is too high, looking at some retail prices that are right in line with year ago levels. So I'm not in agreeing with saying, these consumers are looking at these high prices and backing off. We've been able to sustain this for quite some time. I like what I'm seeing going ahead there.
Well, Scott, I appreciate you joining us this week. What's the best way for folks to get a hold of you guys?
Yeah, give us a call or check out our website, kkvtrading.com. There's a lot of information on there, so check that out.
All right. Thanks for filling in for Brad this week. Happy New Year, Scott.
Yeah, Happy New Year.
Happy New Year, of course, to all our listeners as well. This week's Cattle Call is being brought to you by Wolf Auto, small town strong. And a quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's another edition of the Cattle Call on the Rural Radio Network.